tax is a good measure to actually manage the inequalities and to channelize rich money to growth money.
The government will continue to nudge and push towards the direct tax regime in an indirect manner.
This interim budget, there was nothing for the taxpayers. And they don't have the full majority. So I believe that in this budget, there will be something big for the taxpayers.
The focus of the government should be to improve compliance so that there is an equitable distribution of payment of direct taxes. There are people who are driving luxurious car and buying, expensive apartments, but are not necessarily paying taxes.
There's one thing all office goers, businessmen and entrepreneurs look forward to at the time of the budget. It's taxes. India's net direct tax collections grew 17.7% to hit 19.58 lakh crores in the year gone by. The share of personal income taxes rose to over 53% from little over 50% the year before. Corporate tax contributions dipped to 46.5% from 49.6% during the same period. Individual taxpayers are contributing more and more to the exchequer with each passing year. Only natural they expect some acknowledgement from the government. With rising inflation and shrinking incomes, the anxiety before budget day has only heightened. Would a coalition government this time around work to the taxpayers' advantage?
Two extremes. There is one extreme that there'll be big bang things, big bang changes, capital gains tax, manufacturing incentives, old regime, new regime. And there is something in it which says that, now already we are 4 months down the line. So will they just do something nominal now and then wait for the next year's budget to do the stuff which they want to do?
This interim budget, there was nothing for the taxpayers. And they don't have the full majority. So I believe that in this budget, there will be something big for the taxpayers. I think there will be some major changes in the direct taxation, maybe increase in the basic exemption limits, or maybe more relaxation in the new regime, slab rates, rationalizations, and maybe some introduction of rebates in new regime. So let's hope for the best.
Budget 2020 came with the introduction of the new tax regime. However, taxpayers who opted for the new tax regime could not claim major deductions like HRA, LTA, ATC and many others. Hence, smaller number of taxpayers opted for this regime. In order to make the new regime more attractive, Budget 2023 came with some big ticket changes. 1. It was made the default regime for all taxpayers. 2. The basic exemption limit was raised to 3 lakh from 2.5 lakh rupees. Tax rebates were hiked to 7 lakhs from 5 lakh rupees. Standard deduction of 50,000 rupees was introduced to the new regime as well. This is just to name a few. 4 years down the line, the old tax regime is still around. Would the new tax regime be made even more attractive this time around so more people switch?
Something has to be done for the people who are salaried class, who are middle class. Most of these exemption limits also in the old regime are archaic. So if you ask me, take an example, the 2.5 lakh, 3 lakh slab which is there. It's been a while since those slabs changed. If you look at the small savings, even if you went in the old regime of 1.5 lakh, that happened some years back. If you look at the medical insurance, the various deductions where there are caps, even standard deduction, which is applicable to both the regimes, it's only 50,000 since quite some time. So a relook at all these exemption limits, whether in old or few in the new, is something which is really required. Otherwise, it's very difficult to manage the inflation the way it's happening.
What people want is that the new regime should include some deductions. But I am of a different view, because I feel that if people get deductions in the new regime also, it will make the new regime as well, complicated as well. So new regime should remain as it is. But yes, definitely rationalization of the slabs should be done. So the slab is starting from 3 lakhs, that should be pushed to 5 lakhs at least, because we are sitting at 2.5 since so many years, and in lately only that 2.5 was made 3, and 3 lakh is nothing in today's time. So that should be made to come to 5.
There is very little hope which I have. I think the tax slabs have been raised multiple times in last 5-10 years, and my sense is we might not see. In fact, the government will continue to nudge and push towards the direct tax regime in an indirect manner. So what I mean is, government will keep pushing the taxpayers to adopt the new tax regime and move away from the old tax regime. How tactfully do they manage and balance that out is something to be seen. Right, they will have to give away some inches on the new tax regime, which we can see. Maybe 1 or 2 exemptions might come into the new tax regime to perhaps lure the old tax regime investors to move away from the old tax regime. Maybe one thing which can perhaps be included is some housing benefit under the new tax regime, which I think is a bigger one, because the underlying objective is government is also to boost construction and real estate as a sector. So if something comes out there, then yeah, I think it should be great. But ELSs, I honestly doubt. I think there's been an industry call for DLSs also, which is a debt-linked savings scheme, which hasn't seen the light of the day. But my sense, it's perhaps too late for that to come also. So yes, I think only the housing part is something which I'm hopeful of, but other than that, nothing.
Household savings in India are at their lowest. Net household savings declined sharply by as much as 9 lakh crores of rupees between 2020 and 2023. Would this budget offer incentives to wage earners in order to reverse the trend? The government may be tempted to offer incentives towards investments in certain sectors as well. Real estate, gold are some that come to mind. Currently, any capital gain from the sale of real estate held for 24 months or less is treated as short-term capital gain. In contrast, the holding period threshold for listed equities and equity mutual funds is only 12 months.
Today, what is happening? You saw HDFC results. HDFC has no growth in deposits. No growth in deposits means soon they will have a situation wherein they'll not be able to fund capex. All the money is going into SIPs, all the money is going into IPOs. So how to channelize money back into the banking system and back into funding of capex? How to move money into PFCs, RECs, all these funders of long-term capex is what the government really has to incentivize through tax incentives. And yes, the PF and the ELSS play a large role, because that's long-term money going to long-term capex. So yes, I see a lot of thinking which should go through. Whether it will go through or not in this budget, I don't know. To move money into really growth capex which fuels the economy.
Perhaps one front which is a little vulnerable, Amit, this time is the capital gain taxation. Look, I don't know how much will that get altered or not. Again, it's all guesstimate. But my sense is there could be something on the derivative side. You might see some amount of extra burden on the derivative traders or day traders, or as you might call it, because that's becoming a little bit of a systemic issue for government or for the regulator per se, right? That's part number one. And part number two, my sense is with so many different forms of taxation in the country, there is no uniformity across asset classes, right? Gold is taxed in 3 different ways, and perhaps listed, unlisted equity is taxed in a different manner, debt is taxed in a different manner. So my sense is government might again make 1 or 2 steps towards uniforming this entire tax structure. And in that, if a long-term capital gains tax comes through in some form or manner on equity, I will not be totally surprised, though as much as everyone would like it, we don't want to have that in the country. But again, that would not be a surprise thing.
Futures and options have been under the radar of scrutiny of the RBI and the government for some time now, them likely being the cause of depleting household savings in India. The fear among speculators is that Modi 3.0 would walk the talk and reclassify futures and options transactions from business income to speculative income. And this reclassification would place earnings from these derivatives in the same category as lottery winnings or cryptocurrency investments, which currently attract a flat tax rate of 30%.
Like if you look at the futures and options market, the margin to trade, I mean, there's so much speculation all happening. What they did with crypto, would they do it today with the investors? Will they make some of these trades unattractive? Will they try FNO at a higher rate? Will they do something to short-term gains to make it unattractive so that people make long-term investments? Those are some temptations which they may have to get the behaviors right and not get into a gambling speculative instinct. So I think two big changes which the market one will want and the one which the market will fear will be on capital gains tax, and the one which it will want will be on incentives.
In income tax, we levy different slab rates. The rich people pay higher tax rates, poor people pay lower. Can we create that kind of handicap in FNO market where less informed people pay lower STT and more informed people pay higher STT? That will probably create a level playing field based on concept of handicap in FNO market.
Slab rates are expected to be rationalized. However, the government would be looking towards widening the tax net. As things stand, close to 54% income tax filers have incomes between 1 and 5 lakh rupees per annum. But their contribution is only around 18% of the total direct tax revenue. The government in its interim budget in February had emphasized its focus towards fiscal consolidation. RBI dividend and inflows owing to JP Morgan bond index inclusion would only come handy in reducing the burden on the taxpayer. The government has big ticket reforms on its mind while targeting a 4.5% fiscal deficit and an over 8% GDP growth rate.
The focus of the government should be to improve compliance so that there is an equitable distribution of payment of direct taxes. There are people who are driving luxurious car and buying expensive apartments but are not necessarily paying taxes. If you look at the consumption pattern of a poor person and a rich person, that's quite different. A poor person might be buying a small watch. The rich guy might be buying a very, very expensive premium watch. While the tax on the same is the same, the amount paid is vastly different. Second, if government doesn't raise revenue, how will it build the necessary infrastructure? Time and again it has been seen that it is the infrastructure which creates growth. It is the rule of law which creates growth. It is the establishment of governance which creates growth. Now, if we don't provide sufficient infrastructure, sufficient governance, how will growth be created? My feeling is that we should be focusing more on equitable distribution of taxes so that every Indian pays fair share of tax according to their need, according to their ability.
The abolition of wealth tax was not a great idea because wealth tax was basically for the people who had great amount of wealth and they had some thresholds as well. So the people who had big amount of, huge corpus of money, properties and everything, they were paying wealth tax. So I think abolishing wealth tax was not a great idea. Secondly, if you see the corporate tax rate, that is quite low in comparison to the highest slab rate of individuals. So basically, government is saying that if you want to do a business, don't be a proprietor, don't be a partnership firm, form a private limited company because we are charging lower tax in that. So basically, the people who are into business are paying low taxes because they are booking all the expenses, and not always all these expenses are related to the business. I must tell you that. So the salaried people are actually suffering because of the corporates, because they are not paying taxes properly. The business owners are not paying taxes properly, and the salaried people have no choice.
One would be but obvious to have the slab rates looked at, because individuals drive a lot of things in this economy. Very, very simple, very populist, and very, very effective. And second is a rather boring wish list. A boring wish list would be the compliance part, the automation of the tax office, the enablement for people to pay taxes, and people actually complying with it in an easy manner, सरल form.
There is no reason why a salaried class employee should be hiring a chartered accountant or should be even going on to an online portal and filing his taxes. It should be a click of a button and all the information today is automatically being tracked by the government.
And the dispute machinery, solving disputes easily so that money is blocked in. Tax disputes are also unlocked for government to do more. Settlement mechanisms to reach a very healthy way of debating things between the authorities and the taxpayers. So I think the administrative part, which we have come a long way, if we really build upon that in a very systematic way, we'll look at it may sound very dull and boring, but can unlock a lot of value for the taxpayer and the government by having lesser disputes.